Hello everyone, it is just before midday in the UK on Monday the 8th of June 2020. So this is my intraday layout. I've got a 15-minute, 30-minute, 1 hour, 4 hour and daily chart set up here. I'm just going to open, adjust those a little bit. Give me a second here. Okay, so it doesn't seem to want to do that, so that's fine. I'll just adjust it manually. Okay, so I'm watching there's a potential flat level breakout here. All right, so a bit of clear range consolidation occurring on 1 hour. It's usually because the 4 hourly was a bit overextended, but the market is so bullish that it really doesn't want to come back to retrace to test a level. It's more interested in attempting to continue first and then doing a retracement at a later stage. The daily is a little bit further away from the moving averages than I would like if you compare it to previous cycles. So, you know, a pullback from here on the daily makes complete sense. So that's where the caution comes in on the trade. On every single one of these, the daily has headed further away from the moving average than previous cycles. It's also broken through some key levels, but just noting the 4 hourly looks relatively bullish. Now, as the US comes online, which is in about the next 90 minutes, officially at 2:30 p.m. UK time, but around 1:30 p.m. we start to get a sense of the early start of the direction for the day. So there could be some resistance here. I'm just going to minimize, I'm going to reduce the price and just show you here that you can see these momentum indicators heading lower, which is usually an indication of some exhaustion. Okay, so we are within a range here, price is consolidating, and actually it's likely that as it gets closer to the moving averages here, it's going to want to take off. Can do it in the past, in the past it can just connect and then take off. So it might break through in the near future. Alternatively, it'll stay sideways and then break out later this evening or later in the afternoon. So this is what I'm looking for. I like the structure of this. I'm just noting it is within a range. It's a very clean, clear, crisp range, and I'm looking for a breakout to the upside. So I am aware of the higher risk of it being overextended on the 4 hourly, which is why it's consolidating, and I am aware of it being overextended on the daily. So that is added risk to the trade. Not enough reason yet to not take the trade, as far as I'm concerned. And I'm just looking here to see how price is behaving. So you'll notice on the most recent highs here, as price hits higher, I can see the MACD starting to climb and RSI. So in these situations, I'm not too concerned. A little bit divergent on the higher time frame, and that makes sense. The consolidation is happening because the market is exhausted. And so what I'm going to be looking for is a breakout above these flat levels. And this is what I wanted to record here and just kind of have a discussion. Is a more aggressive approach would be for me to place my stop loss below that most recent swing low. So that's much more aggressive. It means that my first 1-to-1 heads towards 27.43, a little bit of sort of closer to that, and so I can get my trade to break even once it breaks out relatively quickly. But a more sort of risk averse and perfectly acceptable approach would be to put it below these kind of below this range over here. So that might as well just tuck it below that range there. That gives it some additional stop loss protection. And but that does mean that my 1-to-1 is a lot further away. So there's two different stop loss approaches there, and so that's what I'm ultimately going to be doing. We're now starting to head towards uncharted territory. This one in particular does have previous highs which we haven't connected with yet, so that's okay. I'll tell you what, I'm just going to place that level in. Can I actually do this one? I can copy that and just place that up here. That'll do for now. So those are the levels I'm really going to be watching. There is another potential level over here, which is where we are now. So let's just go ahead and just copy this one. So I usually do a monthly and a weekly and a daily. Let's just put that up there. There we go. There we go. So those are kind of where we are right now. Once we break through that, we've got another little level up here, and then we'll start to push on a little bit higher. I'm happy with that so far. That will do me for that particular setup. And so I'm looking for a breakout on that. If I go and have a look at the S&P, it's a similar approach. So again, I'll look for a flat level breakout. My stop loss, if I do it aggressively, will just be below the low here. I'll be looking for a break above these levels. Tech as well, which is obviously very bullish, has not consolidated the same way. It's actually doing more of a retracement on that 4 hourly time frame. So that may even offer a better reward to risk setup as price pulls back into that area. I might get a nice little bullish candle later in the day, excuse me, and then just trade that to the upside. So just highlighting that's a breakout level. I can see here the Russell has broken through. That looks good, looks nice and healthy. It's all following through there. There's my flat level. So on there's a possibility even here for price to come up, pull back, get a tighter entry on that 15-minute time frame as that takes off. So the direction is clear. I've identified the risk. That's really nice. So that is now connected with the moving averages, and that's good. A little bit overextended on the daily, but not insanely so. And so that's kind of my approach to that. Having a look at a few of the others, I think I prefer the US ones at the moment. EU are setting up nicely on the 4 hour, so there are some potentials. As I said, I'm not ignoring the fact that the daily is overextended, and therefore we might get a deeper pullback in the early part of this week. Nikkei was one that was incredibly bullish. That's already set up with a nice 4 hourly candle, so there's some possibilities there. And Australia is still within its range, but looking quite nice and bullish. So and these are the flat levels I'm looking out for, and I think I may take an approach, and maybe I could even do 0.5% on this and do split up my orders. 1%, sorry, beg your pardon, start again. Split up my 1% into 2 0.5% orders, with 1.5% trade being with a wider stop loss, and another 0.5% trade being a tighter stop loss, and give that maybe the 1-to-1 target. So that's going to be my approach on these, and I wanted to keep it specific to these charts so that I can give you some feedback on that.